Phil C here with you. I trust everyone has had a great week and an even better weekend. As always, I'm grateful to have another day with you, and I wholeheartedly appreciate you for spending time to be here with me too. Now, today is another big one. I wanted to title this video, I Did It Again, because we have another pattern episode with you, a special episode. EURJPY was identified in last week's Star Trading Overview, and it's already hit target 1 and target 2, so that paid off. Remember, patterns pay. 140 pips for target 1. If you're trading one lot, that's about $1,400. Target 2 was hit for a total of 245 pips, so that would be 2,450 on the balance of that trade. Today, I want to go over how to identify this pattern. It's the bat pattern, and how to do your entry, stops, and targets so you can go out and trade this and try it yourself. It's had a lot of interest, and I would like to do that for you today. So, if you love patterns as much as I do, you'll enjoy this one, so keep watching with me. Just quickly though, these kinds of trades and profits are possible for you too. Reason I mention that is I was talking to Charlie, a beautiful soul, last night on a Zoom call, who is now a private client of mine. So a shout out to you for having trust in myself and getting started with Star. Appreciate you, and I'm grateful to work with you. So thank you. Now, Charlie mentioned something that stood out to me, and it's this. Trading can happen for you if you truly desire it to be so. Now, I'm thankful for that insight, because in this industry that you and I are involved with, there is a lack of compassion and encouragement towards others, and how difficult it is to find someone to trust and who is genuine in wanting to help. So I wanted to let you all know today that your dream of becoming a consistently profitable trader is more real than you imagine. If it happened for my mentors, people who trained me, if it happened for myself and the people I continue to work with, there's absolutely no doubt in my heart of hearts why it cannot happen for you too. And it will happen for you. Trading isn't really overcomplicated. Remember this well. If you start with one strategy, take it to one pair, and you trade it on one time frame, that's all you need. Because if you can't get that working, then logically nothing else is going to work for you. But if you take that and you have a 50% win percentage, so if you are half right on that strategy with a positive risk to reward profile, then you are already there. I want to make sure that you understand that, because what I'm saying is you are already profitable. If you have a strategy like the one I'm going to show you and teach you today, and you are half right, and you have over a 1-to-1 risk to reward, you are already a profitable trader. The missing link and the consistency is this: taking what you have and knowing that over 100 trades, if you gain more than you lose, so a positive expectancy. If it does, then you have a winning system. And if you trade that every day, you'll find consistency for your efforts. And guess what? That's how close you are to becoming a consistently profitable trader. Now, putting that all together into a plan is hard, when you have to filter through all the guru nonsense that's out there, that's only marketed so that they make money at other people's expense. And what I shared with you right now is never ever talked about. And I shared this with Charlie on the Zoom call last night. It's not your fault. The guru trading ads are full of hooks and marketing nonsense to try and sell their stuff. And it's disingenuous, and it's disrespectful, and it's annoying. So that's why I continue to show up every day, because I'm accepting it as my responsibility. So we've put together a plan for Charlie. He's signed up, and we're going to work on that for the next 3 months. That positions him to get real trading results for his efforts. So we'll head over to the charts and I'll do a training on the bat pattern. Then we'll take a look at some to watch through for the next week of trading in a second. But I thought it was important to share this first with you, because if that sounds like the approach that you want to have in a realistic time frame, then I highly encourage you to reach out to me below for a free trader assessment. It's brand new. I put it together. If you want to get on a Zoom call together and work on it with you, I'll leave a link to that below. So just book a time with me, and I promise you, it'll be a turning point in your trading. I love people, and I love working with others. So I can't wait to talk with you and get you to where you not only need to be, but where I believe you deserve to be. A professional trader. And I wish that for you. Alright, so let's teach you the bat pattern and have a look at some trades. So please book a Zoom meeting with me below. It takes about 30 minutes and I'll give you something whether you decide to work with me or not. That way, at least I'm doing what I'm meant to be doing, and I'm doing my part to help other people as well. Alright, Euro Yen from last week. So every week I do a star trading overview. So that's the STO video that we're doing right now. And it's a week, it's doing the analysis that you have access to with all my training. Doing the analysis to identify certain potential trade setups, okay? The past couple of weeks, we have been identifying pattern trades, and they have been paying out really well. Today, I want to teach you this pattern so you can go and use it yourself. This is the Euro Yen on the 4-hour time frame from last week's STO video. And price action came up into a CD completion. I said that we are going to sell on market open. Why? Because the conditions were met. Those conditions being a bat pattern. Soon as that happens, it has met your criteria. And if that strategy has a positive expectancy, it gains more than it loses every single time it sets up. You buy or sell. And that's what we do, right? So last week we came up and hit the CD completion, and we identified it here. So we were still in the sell zone. And then on market open, we sold right there at market. And it just so happened to be another pain-free trade, right? Stops above our swing high looking left. And then, target 1 was obtained, hit. We take off half of the contract because we always trade 2 targets. We roll stops to break even. And then, sure enough, we head on down to target 2, So, yeah, it's quite a decent trade right there, and it keeps happening over and over. And I expect this market to just continue pushing towards the downside there, closing below this low. Now let's get into the training here. Okay, so I'm just going to scroll up like this, and I'm going to walk through how to identify it. Now we're using Fibonacci retracements with this because that is what pattern trading is. Okay, I call it the ratio designer. So this is what it is. First, we need an impulse leg. Okay, we need price action to put in a move from a high to a low, or from low to higher. That's an impulse leg. First, we need that. Okay, and we're going to take a look at a couple of trade opportunities that you can go and watch as of next week, coming into next week trading. So we have an impulse leg. This is the starting point right up here. So I'm just going to put SP for now. This is our starting point. Okay. The first condition that we are looking for, that we're paying attention to, is we need a pullback. Okay. So this one here, this example, we're looking at a bearish opportunity. Okay, this is a bearish bat pattern. So bearish bat pattern. This is what we're learning together right now. So this is our bearish bat. Okay, the first thing that we need is the market price action to put in a pullback. Where does the pullback have to come into? This is where we need our Fibonacci retracement. Okay, what we want to do is grab the Fibonacci retracement tool and go from swing high all the way down to swing low right here. What we need is price action to come all the way up into and hit the minimum of a 382. And when I'm talking about these moves, I'm talking from the wick of the candle. So not the body of the candle. I'm talking from the wick of the candle. Okay. So this is our candle and these are our wicks. So when we're drawing the Fibonacci retracement, we want to make sure that we do that properly. We grab a Fibonacci retracement tool and we take it from the wick. Okay. Not the body. The top wick to the bottom wick. Right. So that's how we draw it. That's how you do a Fibonacci retracement properly. So that's what we do. We grab a Fibonacci retracement and we go from swing high all the way down to swing low. Right there. Then, the first condition is price action must touch the 382. Okay. It can come all the way up into, where is it? I'll put it on properly. It can come all the way up into a 50%, okay, but price action must not touch the 618. As soon as price action touches the 618, it is no longer a bat pattern. We are now looking at a Gartley pattern, and I'll save that for another time if you want me to do that. Just let me know in the comments if you want me to teach another pattern after this one. So we need price action to come up and touch the 382 minimum. It can touch the 50, but must not touch the 618. Okay. So the bat pattern that we had on the Euro Yen touched the 382, right? So condition 2 is we need price action to come all the way down into a minimum of a 382. Okay. So that's our next criteria that we need for a pattern. So let's do that together now. Let's grab the Fibonacci retracement and go from swing low to swing high. Okay. The minimum that we need is a 382, right? Price action needs to come down and hit the 382. Now, it can touch the 50, the 618, the 786, and the 886. However, it must not violate our lows looking left. Okay. Just zoom in a little bit here. So we'll do that again. price action must come all the way down and hit the 382 minimum. It can reach 50, 618, 786, and the 886 all the way down into this low, but as soon as price action presses lower, and again we're talking about the wick here. Here's my candle, and this is my wick. As soon as we press down lower, so if price action comes all the way down and we have a wick there that is lower than this low, then this pattern is no longer valid. Okay, so we need a minimum of a 382 all the way down, but must not violate this low. Again, the wick of the candle. Okay, right there. Let's say it hits the 618. Okay, so that's condition 2. Now what are we looking for to complete this bat pattern right here? Okay, we've got our impulse leg, price action has a pullback here, we have a press down lower again. Number 3, we need a Fibonacci retracement from this swing high to this swing low. So it's the same as the first one that we did. Okay, what we're looking for is price action to come all the way back up into the 886, and that would complete this bat pattern. Okay, so let's grab a Fibonacci retracement and do what we did for the first move. We go from swing high all the way down to swing low, and what we're waiting for is price action. What we're looking for is price action to come all the way up into the 886 right here. Okay, so as soon as price action comes all the way up into that 886, that meets our criteria, because we have this condition met, 1, this condition met, 2, and this condition met, 3. And that would complete our bat pattern right there. As soon as we get price action come all the way up into our 886, then we have a valid bat pattern. And this one right here would be our CD completion right there. So what I want to do for you now is just go and name those, or just label those. Okay, so this is your X point right there. This is your A point right here. This is your B point right there. And this is your C point right here. And the last one is our D point right there. Okay, so as soon as you have an X to A to B to C to D, that completes your bearish bat pattern. Once that completes and price action hits the D point, then we can sell. And that's exactly what you see me do every time I do a start trading overview, right? So that's what we do. And it would look something like this. So X to A to B, B to C, and C to D right there. You now have your bearish bat pattern, right? So those are the rules, okay? That's how you identify the bat pattern. Now, what I want to show you is how, after we identify this, how do we make money with it, right? Let's bring that back. How do we trade patterns for profits, right? So we need our Fibonacci retracement tool. And what we want to do is look at this level right here. So this is our D point completion, okay? And this red box right there is our potential reversal zone, right? Now, it's from the 886 all the way up into our swing high right there, okay? So this high looking left which is the start of our X point, and the D point completion, which is our 886 Fibonacci retracement. This is where your red box is. Anywhere within there is a valid sell opportunity. Okay? So if price action were to push higher and the body of the candle closes above this high right here, then this is no longer valid. Okay? So I'll say that again and I'll demonstrate that. This is our bullish candle. Let's make that green. Right there. I want this so simple to understand. Okay? Price action pushes up, 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 and then it leaves a wick like this. Okay? Right there. And then price action comes all the way back down below our X point right there and leaves a wick like that. That is still valid. This is still a sell opportunity. As soon as the body of the candle closes above, right there, as soon as the body of the candle closes above this high looking left, this trade is no longer valid. The bat pattern has become invalid. Then we would be looking at an alternative bat. So the alt bat, which is another lesson again. So this bat pattern would be no longer valid if the body of the candle closes above that X point. Okay? So anywhere within this box is a valid sell. We have our entry at the 886 right here. Okay? Our stop placement is above our X point looking left, right? So here's what you would do for a stop placement. Take your Fibonacci retracement tool and go from your X point all the way down to your A point and put your stop at the 113, okay? Right here. So this right here would be your stop. This one right here would be your entry. So now we have our entry and now we have our stop. Okay, we're doing good, right? So where do we look to take profits? So we identify this bat, we get involved, we sell at the 886. We know where our stop placement is. So where do we get out if we're wrong? That's why it's above your X point looking left. Okay. Now, where do I get out of the market if I'm right? Where do I take profits? So let's cover that now. What we need to do is yet again grab our Fibonacci retracement tool. Okay. So this one, we're going from this swing low all the way up into swing high right there. So let's do that now. Swing low all the way up into swing high. Okay. Your targets will be, let's get rid of this, try to make it a bit more cleaner. Okay, here we go. Your targets will be at a 382 for target 1. Okay, so right there, Fibonacci from A all the way up into D. Your target will be at a 382 for target 1. If price action moves all the way down into the 618, that would hit your target 2. Okay, down into the 618 is your target 2. Target 1 is at a 382. Target 2 is at a 618. Okay. Now what do you have here? You have your entries, you have your stops, and then you have your target 1 and 2. Okay, you have your targets there. So now you know how to identify this pattern, you know how to enter this pattern, you know how to get out if you're wrong, and you know where to get out if you are right. And if you trade this and you're half right and you have this kind of risk to reward profile, you're going to do incredibly well. I can promise you that. Okay? And we see this time and time again through the star trading overviews. And for those of you in my private client group, for those of you there, see that every day. We come in and trade the London live market, the London market open, every single day. And we do this analysis and we document the trades because transparency and proof of concept is key. So I just wanted to do this with you today to show you, to do a training with you and teach you this pattern. Very slow and steady and as clear as I can be with this one. So you can watch it again and again and again and identify these for yourself. So you can go out and start trading it, because at the end of the day, I want you to be profitable. Your success is my success. All right? And again, if you want me to personally teach you this, the link is below to jump on a Zoom call and we can go through it together, you and I. I love to do that with others. Absolutely. So now let's take a look at a couple of trades. Jump back out to the daily here. All right. So let's take a look at a couple of trades that we can pay attention to together throughout the coming next week. Let's do that. On the Aussie yen, we're still tracking to see if we can hit target 2 there. Let's go back to dollar yen and we'll take a look at this one. Okay. So two bat pattern trades. So what you just learned on the dollar yen, we have a potential one here, or we may get a move towards the downside. And then we have another one on the Kiwi yen. Okay. So let's take a look at the bearish one. That's what we want to do, because we just covered that. So here's my starting point, and here is my impulse leg that I'm paying attention to. So swing high all the way down into swing low right there. Okay. So we get a pullback. All right. So what is condition 1? Well, we're looking for a pullback that hits a minimum of a 382, but does not hit the 618. Okay. So let's grab our Fibonacci retracement tool and go from swing high all the way down to swing low. Now, as you can see, as price action came up into our 382 and 50%, we almost hit the 618, don't we? But we don't, right? So we're on bat pattern alert. We have our condition 1 met. Price action has a retracement into a minimum of a 382 and we don't hit the 618. So that gives us the start of a potential bearish bat pattern. Okay, so what do we do next? We take a Fibonacci retracement tool and go from swing low to swing high, and then we need that 382 minimum, which we get easy. 50, 618, 786 right there. Okay, price does not come down and violate this low. So that means condition 2 is met. So what is our third one we're looking for? Well, we need a move all the way up into our 886. Remember, Fibonacci retracement from the first move. So go from our swing high down to our swing low, right? We're waiting for price action to come all the way up into our 886. If price action can push up into our 886, we get the W formation. Then, if price action hits this, we have a valid sell opportunity in the form of a bearish bat pattern, okay? And it would look something like this. Grab our triangle tool, X to A to B, B to C, and C to D right there. Yes? Now, where do our stops go? Because we know where our entries are, 886. So our stops will go right there, okay? Entries at the 886, stops at the 113. Because if price action moves higher, closing above this high, then we might get a pullback into that level, and then we might reload into new highs. Okay, that can happen. If it does, we're wrong initially on that move, and we want to get out of that position. So we have our entries here, we have our stops here. Where do our targets go? Fibonacci retracement, swing low, so from A all the way up into D, isn't it? So swing low all the way up into swing high. Now where are our targets from the training that we just covered? Well, we have a 382 right there, and then a 618 right there. Now you have your entries, stops, target 1 and target 2. Okay, so this is your valid trade. If we get our bearish and dealer thingy right there, and we put that in right here, and then we duplicate this, so we copy and paste, and then we move this down, we now have a potential bearish opportunity. If price action can push all the way up into a D point completion right there, well, we know our entry, stops, and targets. We have over a 1-to-1 on target 1, and we have over a 2-to-1 on target 2. Again, emphasize, if you're half right on this, and you have a positive risk to reward profile, you will make profits with this strategy. See how easy trading can be? It doesn't have to be overcomplicated. It can be very simple if you take one strategy, one pair, one time frame, and try it out for yourself and see that it doesn't have to be difficult. We tend to overcomplicate things. So take this strategy, pick a pair that you love, a time frame that you want. So let's say euro dollar 1 hour time frame. Take this strategy and go and see for yourself. And I promise you, you'll do incredibly well trading this. Now let's take a look at our last one, and we're just going to wrap it up for today because I'm doing another long video here. Well, especially when we're doing a training session, right? They tend to go longer than analysis. So this one here, we were watching this, we were paying attention. So the reason why I wanted to finish up on the Kiwi yen is last week in the star trading overview, I had a Gartley pattern here. So this bat pattern didn't get to play out, so that's okay, we'll delete that one. But we had an M formation, okay, right here. Now this one is a Gartley pattern. We came down, and again, I called this out last week on the star trading overview. We came down and hit the 127. That was our Gartley pattern entry right here. Okay, price action came down. Our targets, you know our targets, Fibonacci from swing high to swing low. You can see that price action came up and hit a 382. Patterns pay. So that pattern was good, and I called out the Gartley pattern last week on the Kiwi yen, and this also played out and hit target as well, right? So we're doing really well with patterns, okay? Now, I apologize for that, I found it. It wasn't the Kiwi yen, that was the Gartley pattern there. The other bat pattern is on the Aussie dollar here, okay? So Aussie dollar, daily time frame. So just quickly do this one for you. So this is our M formation that we can currently see, okay? So we want to take this swing low to this swing high, right? You see that we retrace back down into here, then we get a pop right up here, and then we get another move towards the downside, right? And just to make sure I get it correct, let's grab a Fibonacci retracement. swing low to swing high. Just to make sure I get this correct, because we just hit the 618, we don't, so we have a valid bat. I want to get the drawing correct, so I want to jump down to a 4-hour time frame right here. And what I'll do is draw this out. So X to A to B, B to C, and C to D. Where is our 886? Right there. C to D right there. So we are at market right now. Well, we just missed our entry. Okay, so I'll go back to the daily. Make sure the drawing was accurate. Yeah, so we come down and we hit the 886. So this is something that we can pay attention to and watch together throughout next week as well. So entry, 886, down to our swing low. Okay, so we have that potential reversal zone. This is a valid bullish bat, right? So stops will be below these lows right here. Entry is right there in our green box. All right. Fibonacci retracement from this high all the way down to this low. Right there. And now our targets are at a 382 right here. Actually, it's up here, excuse me. 382 right there. And then target 2 is a 618 right there. So then your trade would look like this. Okay, put your dealer thing in there, roll this up right here. So entries, stops, and targets. Okay, duplicate this one, copy and paste. Now we have over a 1-to-1 on risk to reward on target 1, and then we have target 2 right up at the 618 and gives us over a 2-to-1 risk to reward right there. So that would be our trade that we're paying attention to there. Okay, now this is your M formation, a bullish bat on the Aussie dollar. So that's our training for this one today. If you love this style of trading and you do want to work with me, again, the link is below. We can book a Zoom call, get together, and formulate a plan that's tailored to you to get you results, because you deserve to have that. All right, so I really look forward to working with you. We have our training complete. It's done. You now have a strategy that you can go out and use. The bat pattern. So you have a bullish bat pattern, and then we also covered the bearish bat pattern as well. All right, so you have your W and M formation. I trust that you found this valuable. Please like and subscribe to this video. And I bring these out to you every week, 2 hours before the market opens. All right. Until next time, with love. Yeah, I'll talk to you soon. All right. Thank you so much.